This video is going to be the introduction to options, crypto options, as well as to Dopex platform. So Dopex is decentralized options exchange, a sister service to GMX, which is decentralized perp service, perp exchange. And in this video, I'm going to show you some very basic stuff on options on Dopex and how to use it. So first thing first, the address is dopex.io, but I'm going to start with a Twitter thread from Haim Solomon, which is really great, considering options, what are they and how Dopex is unique, even considering the TradFi versus Dopex. So let's go through that first. So this thread is talking about Dopex. I'm going to link that down below in the YouTube description. So basically, first of all, what are options? If you came here, then you probably want to know. Options are basically a bet on the future value of some assets. In a usual talk, options are a contract between two parties to buy, sell an asset in the future using a fixed price and date. At that future date, the option buyer has the choice whether to continue with the buy-sell or the seller does not. So the seller does not have this choice. And options are usually either call or put options. So as you can see, for call option is basically option holder has the right to buy the asset at a stated price within a specific time frame. So for example, if next month, in 30 days, or there is a put option which is sell, and the option holder has the right to sell the asset as stated at a stated price within a specific time frame. So basically those are the two people operating. There's a bet between them, and there is the premium, which is how much you have to pay for the option. Also there is a strike price. Strike price is the price that you have to the specific price is in the option. So for example, strike price of ETH being $2,000 next month. If ETH is below, then basically the option is not realized, the call option is not realized because you didn't attain that. But if it's above, then you basically get everything above it and you can exercise the option. That's the simplest example. So yeah, here let's go into also a couple of other examples from Solomon. Call option, the right but not the obligation to buy an asset in the future. And here's an example. ETH costs $1,500 and you can purchase a call option on ETH at 1750. If the price of ETH is higher than 1750, then you can exercise the option and buy ETH below market price. So if it's not actually, then you don't have to exercise it as a buyer. So basically the option just expires and you just lose the amount you paid for the option. So that's called the premium. On the other hand, you can sell the call option, so you can short the call option. You are on the opposite side then, and it means that you don't have this choice because the choice is with the buyer. So you can have unlimited losses with shorting call options, but that's still possible. It's similar to buying the put option, but with the fact that you have this obligation to sell it, it's definitely more risky. So again, there's the put option, the right, but not the obligation to sell an asset in the future. So for example, ETH costs $1,500 and you can purchase a put option on ETH at 1250. So you're betting that ETH will go down to 1250. And now if the price of ETH is lower than 1250, you can exercise the option. So you will gain, you can actually earn the money, everything below the ETH being below that price. Again, if it's not below that price, then your option expires worthless and you're just losing how much you paid for the premium. So actually the cost of the option. So the economic pin that this all revolves around is the premium. This is the fee paid by the buyer of the option to the seller of the option. The buyer will always pay and the seller will always receive the premium regardless how the option settles. So this is the initial transaction that takes place. Is basically if you're buying ETH at the strike price, the call option for ETH at the strike price of, for example, the 7050 here, then basically there will be a premium depending on the current market condition. For example, if the ETH right now is at 1,500, then basically, and for example, the expiry date for the option is in 2 weeks, then people expect that the price will be pretty much similar. So you would pay something like $250, the difference for this kind of put option. So sometimes it makes sense to buy options, call options, or buy put options for the longer period of time. So for example, if you were in a bull market and you want to hedge the bull market, then you would buy put options for the same price of selling ETH, but in a couple months or a year in the future, because you expect that actually after the bull market everything will fall down and you'll be able still to sell the ETH for the same high price. So for example, the ideal scenario would be if at the top of ETH, for example, for $4,800, you would buy a put option for something like $2,000 or something like $4,000, so even below, you would be able to exercise this option right now and basically earn a lot of money in the process. So yeah, this is the premium. There are two types of options. So basically there's American in the traditional finance, American and European. Both styles are similar. The key difference is the window in which the buyer may exercise the option. So American style is basically you can exercise anytime before expiry, so you don't have to wait for the expiry. European options you only exercise at expiry, so that's a specific date. But in DeFi, this is pretty cool. We have programmable money, so actually there are a bunch of other options as well. Actually unlimited possibilities, which is pretty cool. And this is where Dopex comes into play with options, which are very similar to European options, but there's a new thing because basically so first of all, it's expired at the option is exercised at expiry like a European option, but you can do something with the collateral you put for the option, which is really cool. Again, this is similar to, for example, farming LP tokens from liquidity pools. You can do pretty much similar thing with options and the collateral you put for the options, which is still very cool. Also, if you're just starting with options, you probably can ignore all that stuff and just, think about what to buy, what to sell in general. But this is pretty cool, and there's the whole tokenomics besides this kind of movement with DPX emissions, because there are two tokens I will mention soon coming from Dopex. Yeah, and a couple of other things. So first of all, out of the box, Dopex options gain many of the benefits of DeFi. Composability options are an ERC20 token that can be used in other protocols, leverage, OTC, etc. Incentivized, so DPX emissions and VDPX bribes boost investment profile, and everything is transparent all on chain. The real innovation, however, is with the collateral. In a TradFi, the collateral used to write the options is held in trusted centralized location. In a Dopex option, the collateral can be used for almost anything. And Dopex's first and best known product are single staking option vault. They should be understood as the combination of two products: an option contract with European style settlement terms and a single sided yielded farm. So basically it's like farming liquid LP tokens coming from providing liquidity basically. So if you did that with Uniswap or SushiSwap, then you probably know what's going on here already. So that's the thing. The option only requires access to the collateral at settlement, and because it has European-style settlement terms, Dopex knows exactly when that moment is going to be. Until then, Dopex can deploy the collateral into risk-free farms to boost yield. It is critically important that Dopex deposits the collateral into risk-free yield farms. That's because you need to take back the collateral in the end. The collateral will be needed in a relatively short amount of time. Single asset staking is the perfect candidate for SSOVs, boosted yield without an impermanent loss risk. This presents a compelling opportunity for other protocols. Dopex IO can build SSOV around the whitelisted single asset farms. So you have all this yield farming, and you can use a bunch of other things. The program money, Atlantic options are another things. So Atlantic options are smart contracts that pair a Dopex style option with another DeFi product. So for example, you have this custom Dopex smart contract that can move the underlying collateral based on market conditions. So potential uses: no liquidation perps, unliquidable loans, nested puts, single-sided LP staking, and much more. So basically there's this whole machine besides what you can do with that. Atlantic Straddle is the first product here with this kind of Atlantic option, and it's pretty cool. Those things are selling pretty quickly because there's like limited, for now there's like a limited amount of Atlantic straddles you can buy, and basically they were bought out pretty quickly. So yeah, this is it. This is this great thread from Salomon, and basically going into Dopex, you will see something like that. All the trades are basically on Arbitrum plus a couple of other things. You have top investors like Tetranode, DeFi plus a couple of other guys on the team here. I said it's a sister service to GMX because Tetranode is also promoting GMX, and they're kind of overlapped. It's probably not the same team, but pretty similar stuff going on. If you click to launch the app, that's everything you will be needing. You will go directly into single staking options vault, and here you will be able to see a bunch of things. So the easiest thing to start doing something is probably go into monthly calls for ETH options, the easiest thing you can do probably, and it takes a little bit of time. You have the call options, you will have the date, and this is the strike price you will be using. And basically that's it. You'll be able to buy different strike price. You will be able to see what kind of, how many options were purchased in total, what are the positions. Everything is on chain, so everything is really transparent, and it's easy to get around and to know much better what's going on. Yeah, so this is like the vaults are here. This is also pretty interesting. Atlantic straddles that were mentioned by Salomon, they are here, but you can't buy any right now. This, I think, yeah, this is the thing. Insufficient liquidity, yeah, so you won't be able to buy any right now. But you have to look at, basically you have to check what's going on Dopex Twitter to know more like what's coming. SSOV is probably the basic thing you will look for, and the options related to ETH. So check those out. Basically that's the playing around with ETH monthly is probably what you want to do. So you have a couple of options because apart from Arbitrum, you have also Binance Smart Chain and Avalanche. Probably they're also looking at some other chains as well. And that's it. That's it for the Dopex. That's it for the basics of options and options in crypto. Let me know what you think. I have another video on the Rebit and how to use the Rebit, which is another exchange for options on crypto. And let me know what you think. Subscribe to the channel and see you in the next episode.